Wonderful. So we have our very first seminar, what we are totally excited about, Ava and myself, Sophia, and we are so thrilled to have Lino. Lino, we know for the longest time, since 2017, he's our go-to person for any kind of financing and information and help with our clients. He has helped us with many clients, and we are so happy to have Lino to chit-chat with us and talk about the current situations and ask questions away.
Exactly. Lino, why don't you take it away and introduce yourself a little bit to our viewers so that they get to know you a little bit as well.
Okay, so I have been in the industry since 1987, but I've been doing mortgages since 1996. And previously for 26 years at RBC Royal Bank as their #1 mortgage specialist in the country for 18 consecutive years. And now currently for the past 4 years, mortgage agent on the broker space, where we now have over 65 lenders that can assist our clients.
Exactly. And we love it so very, very much, because now you have so much of a bigger reach too, right? And can help clients on all kinds of different levels, where you were maybe tied down a little bit more for in the beginning, right? With the banks.
That's absolutely the idea. Absolutely the idea.
Having more lenders available, what is fantastic, more options for clients.
Of course, and better rates.
Yes, yes. Maybe you can get into that a little bit, because I find a lot of people are not really aware what the difference is, when choosing, either mortgage agent versus going to their bank and getting or asking for a mortgage.
Let's cover the first misconception that Canadians have, which is if they go to a mortgage broker or mortgage agent, they're going to pay fees. This is completely untrue. There are no fees. Going to a mortgage agent is basically the same as going to your bank equivalent, except instead of one financial institution to negotiate an interest rate, we have over 65 lenders that we can negotiate the rate. So if a client says to me, do I have the best rate? Did you get me the best rate? I normally say, well, if you think there's a better lender or a better rate, let me know who it is and I will send your file there. Because we basically have pretty much most of them, like 99% of them, 98% of them, right?
Is there ever a fee involved if somebody needs a B lender or C lender?
Absolutely great question, Sophia. Thank you for asking. And yes, there is. Sometimes there can be fees. When the lender does not pay the mortgage agent, then normally we will charge a fee. But that is in the case of clients are not able to obtain an approval through your regular A-bank channel. So in other words, it's going to be that lender with that fee or do not buy. And it's the same for me as it is right across the board. And normally those clients who are paying a fee cannot walk into a bank and say, can you give me a mortgage? They will not provide it to them. So therefore they need a mortgage agent, they need that lender, and therefore the lender does not pay the mortgage agent, knowing that the client, unfortunately, is going to require that approval. There's only one way for them.
Is there a rough idea or a rough amount what these fees are? An average?
It's normally 1% of the mortgage amount.
And in your experience, what should people looking to get into the market right now do versus what should people do when they're looking to buy 1 year down the road? Is there certain things that you would tell them, please avoid doing this or please do that?
So first of all, I'd like to say that probably they should get in it sooner rather than a year from now. As you guys would probably know better than me, they're probably going to pay a good 10% more a year from now for the purchase price. So even though the rate comes down a little, the price will go up substantially.
Yeah.
The idea would be to really try to purchase as quickly as possible before the market corrects itself, because there was a correction where it took a dip, as we all know, for the past year and a half. And that dip is definitely going to correct itself in the upward position. But what can they do? Set aside savings and just maintain their credit in good standing.
And maybe work on the credit a little bit, right? What about buying a new motorcycle or car in that time?
Definitely not. If your intentions are to purchase a home, do not make any other big purchases. It will definitely impact your borrowing power.
Yes.
You have to ask yourself, what is important right now? Is it important for me to have this motorcycle, or is it important for me to have a roof over my head? And I mean, clearly, I mean, all depending on the individual, you know, the roof is probably should have precedence. Right?
Can they make any changes to their jobs? Would you say, you know, if they have another prospective job that might be paying a little bit better, is that a good time to switch, or should they, you know, stick with the job that they currently have just because there is already, you know, that trust that they've been with this employer for a while?
We can approve clients even with as little as 2 weeks on the job.
That is fantastic to know.
Market,
So as long as they're more or less in the same field, and all depending on the probationary period, but even with the probationary period, it's not engraved in stone, all depending on the strength of the client. We can see through the probationary period, but sometimes the bank may say we can't close until the probationary period is over. If it's high ratio, meaning less than 20% down payment, we definitely need the probationary period to be over. That is for sure. 20% and more, we can normally mitigate the risk with the bank and have an approval even though they're on a probationary period. But as long as they've been on the job and I can get an employment letter with their first pay stub, we can definitely proceed with an approval.
See, that's a big market misconception. I find a lot of people think they can't switch because it's going to affect, you know, them getting a mortgage. I find that. Sophia, go ahead. You just had a question too.
Yeah, actually, I would love if you, Lino, can give just a rough idea what is typically needed to get a mortgage. What are the documents, what somebody has to have ready?
Okay, so
and the credit rate, I wanted to know too, what banks are looking for. Those are the documents.
So let's talk about the A bank, the one where there are no mortgage broker fees, mortgage agent fees, no additional fees, and normal rates as opposed to higher rates. Let's talk about those. So with those ones, normally a 650 beacon score, even as low as 630, but that's kind of getting it close. So 650 beacon score, employment with income to be able to service the number that they're looking for. Okay, and typically it'd be nice to have 20% down payment, but we can purchase with as little as 5% down payment. I wanted to touch upon a few things because both of you are instrumental in the new build purchases. And there are a few new things that government has already rolled out. And that is, they are now allowing up to 30-year amortizations for any first-time buyer. It's very specific. First-time buyer purchasing a new build home. Previously, it was only 25 years. Now
that's fantastic. That'll help a lot of people.
It's going to help a lot of people because now their affordability is it goes up substantially.
Clarify this one, Lino, sorry for interrupting, I apologize. So this means first-time buyer throughout the world or only in Canada?
No. First-time buyer if they're able to purchase in Canada. We get the mortgages outside of Canada.
Okay, beautiful.
Right. Yep. So then the next one, which is very, very interesting, it was previously I believe it was $35,000 maximum RSP that the first-time buyer can withdraw. Have increased it now to up to $60,000.
That is nice.
That's beautiful because now they're not taxed on RSPs up to 60,000. And most of the young generation have these kind of savings in RSPs because of their employee contributions. So that's another one that's really going to help.
That's absolutely going to be a big difference, I think. And then just because you started talking about first-time home buyers versus maybe, you know, somebody a little bit more experienced, what is the difference there? You know, if you wanted to buy an investment versus your primary residence, right? There might be some differences in terms of how much you have to pay off and stuff like that, right? From a mortgage perspective, can you shed some light on that?
So if you're primary residence, you can buy with as little as 5% down payment. Rental property is always 20% down. That's a government regulation that applies to every Canadian from East Coast to West Coast Canada, and with all lenders. If you're buying an investment property, you must have minimum 20% as a down payment. Now, that's the biggest difference. The other difference, well, not really a difference anymore, because government, now that they're changing it to a 30-year amortization, previously, primary residence, you could be approved with a 25-year, must be approved with a 25-year amortization, where now it's now 30. So they're both equal now. So there's no difference there because they've upped it to 30 years. So that's, that would have been definitely a difference, but not anymore.
And in regard to the interest rate, of course, since it is an investment property, they will be a little bit higher, correct?
0.20 normally, 0.20.
0.20.
So 5.09 goes to 5.29.
Okay.
A little bit of a difference there. And what are you currently seeing in the mortgage world? For us, definitely, we've seen people, you know, getting off the sidelines, especially first-time home buyers. They said they've had enough, you know, with this little bit of a wait with all the mortgage rate hikes and stuff like this. They decided, okay, we're really ready to get off the sidelines and jump back into it. As you know, we've dealt with you, luckily, in these instances. What are you seeing more right now? First-time home buyers, investors?
A lot of the first-time home buyers are coming to the table. They're now starting to see the light. They're saying, okay, wait.
Yeah.
The ones that are in tune with what's going on with the economy are looking to purchase right now.
Yeah.
Based on my first comment, my opening comment of purchasing now versus a year from now, there's a lot of them that understand that piece. And they say, oh, I don't want to pay $50,000 more a year from now. And, you know, that's going to be pretty accurate. Royal LePage has recently announced that they're expecting homes to increase by 10% by the end of 2024. Okay, so, and I mean, Royal LePage is obviously the brand that both of you are under, and they're basically saying that we're going to see a 10% increase, especially, I think, in the downtown core.
Oh God, yeah. Anything people move a lot and where it's really condensed, where you have the traffic, high traffic areas, right, where you have the subways and public transit in general, right?
Of course.
Pick up quickly, and the big employers, of course, right? It's gonna always make things easier to rent it out later on and stuff like that, right?
If you will, I have a couple of other news flashes in our industry.
Yeah, absolutely, yeah.
Yes.
So
please.
with that RRSP 35 to 60,000, okay, the government has also but has now changed repayment, where they were asking Canadians to start repaying that RRSP within years. They've now upped it to 5 years. So that gives Canadians a little bit of breathing room to say, okay, I have 5 years before I need to start repaying this RRSP, which is great news as well, because considering the mortgage payment being perhaps a little bit higher, it gives them that 5-year term to be able to adjust and eventually start paying back that RRSP. Another important fact that came out was that Toronto is now has now surpassed the values in New York, which, yeah, and you know what? I've been saying this for the past 10 years, that our city, being a first-class city in the world, we were nowhere near the pricing of a first-class city. And just recently, we've surpassed it. And I can give you the figure. I was just opening my phone to give you the difference between New York. And when I say New York, I am referring to New York, not Manhattan, because that would be a little different.
Yeah.
But so the median price in Toronto, apologize here, would be $718,519. The median price in New York, $659,300. So we're just a slightly bit above New York pricing. Another important change, which will definitely impact your market, is going to be that now renters are now able to report their rental payments onto the credit bureau.
Yes.
So
It's going to help a lot of people.
It's going to help a lot of people. New immigrants coming into the country who have limited credit ratings can now report their rent, and all of a sudden they have a good score. And I think that rental credit rating is going to hold more relevance. It's going to be more relevant, and it's going to hold more clout than, let's say, a phone bill or a $1,000 visa.
Absolutely, yeah. Especially with the mortgage. What am I talking about? About the rental rates where we're at right now, right? Because the rental market is quite hot, right?
If you have a client that's been affording $3,200 a month in rent, there's no reason why they couldn't afford $2,800 a month in mortgage payment. So that would definitely help a lot of Canadians, for sure.
Yeah.
And what are you?
For my news flashes, just one moment, I just want to see. Apologize. 30-year AM, RSPs, we covered that. 10%. Yeah, that was it. The news flash.
And what are your predictions for this year? Where do you see mortgage rates going? Any?
So economists are strongly suggesting that rates will not decrease until the fall. I'm going to say late summer. I believe late summer they're going to start bringing the rates down. Government and banks both know that they have to. It's a must. They have to. Otherwise, this economy is just not going to move. They need to entice the builders to start building again. Obviously, we have a shortage of supply, right? And if the builders start to build again, that the builders, I think, is where it all starts. If they start to build, then you have the move-ups who are going to sell, the first-time buyers who are going to buy. I don't think that pricing is going to go nuts. LePage, maybe on the money, with about 10% average, 10% increase. In some places, slightly bid increase, or in other places, maybe 15-20% increase. So the average, I think they're correct on the 10%. But I think we're going to have a moderate spring market where it's going to be business as usual, a little more of a quiet summer, as people in the past 2-3 years since COVID, they become accustomed to taking these summers off, whether they travel, cottage. And then I think we're going to come out with a very big bang in the fall.
Yeah, I have the feeling too. Yeah. I mean, COVID really threw off the whole scheme of how real estate usually is, right? Because we have the big markets, we have the spring and the fall usually, right?
Right.
COVID completely destroyed that, and then we not have a regular market ever since then, right? But I think we're getting back into the more regular side of things right now.
Absolutely.
Yeah.
But getting back to the rates for a moment, when we say 5.09, we've been in the industry long enough to know that 5.09 is not a horrific rate.
No.
It's a good rate. It's a decent rate.
Sophia can attest to that, right? You're
because I used to pay 16%, and my second mortgage was 22%.
My father, 19.99.
Oh, that's dramatic. I know. When you see like 5.9 and things like this, it's not really so bad. But since we were used for such low rates for such a long time, we really got spoiled.
We got spoiled. We did.
The problem is right now with everything going up in price, and that makes it a little bit more difficult for a lot of people. Yeah.
Yes.
That's
Yeah,
for
I
sure.
mean, it still makes sense to put your money into a hard asset, right? Because if you keep the money on the account, it's just going to depreciate, right? Versus if you put it into an asset like real estate, there's only so much land, and there's only, as Lino was already mentioning, the builders are not building fast enough, so the value of it has to go up, right? Just with inflation, it's going to rise like anything else, even if nothing else does, right? Because milk, water,
Everything goes up.
everything goes up, right?
Everything goes-
And for real estate, it's been very usual that the prices go up and down upwards, right?
One
Mhm.
feedback I would love to have from Lino, if possible, in regard to first-time buyers, we find a lot of them don't have saved a lot of money. We always advise them to go for pre-construction because kind of it forces them to save because they pay in installments. But
Correct.
what do you see in regard to the interest rates, how we can protect them? What would you advise? What's your suggestion?
The way to protect is only two lenders that will do long closings, and that would be RBC, TD Bank. Oh, sorry, we have B2B as well. So on this side of things, we have B2B that will protect interest rates as well. So my advice is you purchase. It's not going to be an attractive rate. It will not be compatible to today's 120-day closings, but it will definitely be an interest rate that guarantees them something for the right. So they hold that one rate, and then fingers crossed, rates are lower by the time they close. I strongly believe that for the next 2.5 years, we will see rates lower than 5% for the next
Adjusting.
2.5 years, adjusting.
Yeah.
Of course.
Mhm.
So
That is really nice to know, especially for first-time buyers, that they have a little bit of time and they kind of, with a deposit structure, are forced to save.
of course,
Yeah.
now more than ever, I think it's a great time to purchase new home for
Mhm.
first timers. Well, with the changes of the 30-year amortization and
Correct.
and
RSP.
interest rates on a downwards turn. So I think it's a great time I would say a great time for new for
And
first-
you could help our clients with this one, of course, as well.
I can, yes.
Exactly.
What you have done for so many of our clients, like we are so honored to be having you in our back pocket.
Sophia,
No kidding.
I'm honored to be serving the both of you and your clients. You guys are truly a pleasure to deal with, really.
Big heart.
Big heart.
Sending it out to you. Thank you so much for your time, Lino, today, and for the update. I really truly think this provided a lot of value, hopefully, to a lot of people, and I hope we can do this, maybe a little bit more often, where we can just update a few of our clients and people and see where the market goes and what's new in the industry.
I want to leave you with one thought, please. Whenever you have clients, whether it be in the weekend, the evenings, 24 hours a day, 7 days a week, 365 days a year, I promise, really. Send me a text, even if it's in the middle of the night. Lino, we have a question. Do you mind? Give me 10 minutes and I'll call back.
We
Oh,
have
and that is
seen
very
this
true.
again and again and again with you. You are always there for us. And
No kidding.
for that, we are so, so thankful. You have no idea, Lino,
You're
especially
both
for clients when they're not sure and they get such a prompt answer. It is
It helps.
worth millions.
Thank
No
you.
kidding.
Yeah, millions, definitely.
I really appreciate the opportunity as always.
Thank you.
so
And
much,
Lino,
Lino.
how should the people get in touch with you? Just sending
Exactly.
an email? How is the best to get in
Email,
touch?
cell phone, whichever way they want. Text message.
We'll put your information in the description. So if people have any questions, they can reach out to you directly. People can always reach out to us, and then we'll make the connection to you as well. As we truly believe in your skills and connections in the industry. You've helped really, truly a lot of people.
Thank you.
Yes.
So you guys both have a great weekend,
You as
Thank
well.
you.
and
too.
we'll be in touch.
And
Sounds
thank you for your time again. Much,
My
much
pleasure completely,
appreciated.
Sophia. My pleasure.
All the best.
Thank you.
Take care.
Take
Bye.
care. Bye-bye.
Thanks for watching. Don't forget to like, comment, share, and subscribe.